everybody. Jason Stapleton back here again. I wanted to see if I could find another trading opportunity for you. And you can see it here on the screen now. It's the same basic principles that we were looking at before, where we're finding a market that is overextended, and we're going to see if we can go ahead and just take this thing to the downside. Now, you're going to see a lot of ratio confluence right here. We talked about ratio confluence in the last video. But if I go ahead, and I think it's Control F12 yeah, there we go. Look right in here, right where I'm looking to sell. You got a 1618, two 1618s, a 127, right here at a 786 Fibonacci retracement level. And actually, that's we can go ahead and get rid of that because we don't need it anymore. But basically what I'm doing, guys, is I'm watching for this level, and we're going to go ahead and see if we can get short right here. Now, the overall market today, and this is important, guys, when you look at this, the overall market today is bearish. You can see this. Look at how bearish this market has been. Just straight downhill, and we actually broke the structure back here. If I go ahead and look at this structure line right here, you guys will see that we did get under that. It did kind of hold there, but we got under it, and there's been a nothing but bearish move today. And so what I'm going to try and do is capitalize on that directional movement by finding an area where the market gets overextended to the high side. And so basically what we're doing is, so you look for, we're in a bearish trend, and now the market has a little relief rally. Well, we don't want to try and get long in the relief rally. We want to stay with the trend. We want to stay with the underlying trend. And so we're going to go ahead and look to sell that, that move lower. Sorry, I'm not really looking at the camera. I feel like I should be. And so right now we're just going to kind of watch and see if we can get filled here. And I'll come back when and if we do. I mean, again, this is I do these videos. I don't know whether this is going to work. I don't make a habit out of doing these videos, but when I find a good opportunity that I think's nice, I just throw on the recording, and win or lose, we throw it out there. And so in this situation, I don't know what's going to happen here, but I do know that there's a high probability, because these ratios act like magnets. They suck price towards them, and then they repel price once they're there. And so it's really neat to see how this works, because as you can see, guys, market just getting, see how it's being pulled towards that Fibonacci level? It's being pulled towards that, and we'll watch as it comes into there, this market will just kick it out, and we'll just force it back the other direction. And so, it's amazing to watch. And I say it's kind of like magic, but it's really not magic. It's just understanding how to draw in ratios and fibs. And as we watch this, you can see the market just sucked up towards there. And we're going to get, looks like we're going to get filled here if this market will rally just a hair more. Now again, I front run my orders. What does that mean, guys? It means, 140.91 is where all these Fibonacci levels come in at. And I've got my entry at 140.89. So a couple of pips below that, because I want to make sure that I get filled if the market comes into that zone. And anyway, almost there. I'm kind of buying time here to see what else can I teach you here while I'm waiting. Again, looking left, let's go ahead and draw a little line in here by the lowest F6 here. Right there, boom. So there's the line that the market came up against, and there we go, order filled. Now we're short. Okay, now the market has come up into our area. The market got sucked in by the Fibonacci level. Okay, it's been pulling it towards you, and now we're going to watch as this 1618, as this 127 extension pushes the market away and just pushes price action back down. And what we would expect to see is for the market to come down into this area here and retest those lows. And so I'm going to go ahead and set a buy limit order to cover half of my position when the market gets down there. And again, it's about a 40 pip move or so. So it'll be a significant move for us. And in a day trade, man, you pull 40 pips out of the market, pull 20 pips out of the market. Is a good day, and that's why you can wait for your opportunity. You don't have to get in there and take 5 or 10 trades a day. That's not necessary. What is necessary is that you understand exactly what it is that you're doing and what you're looking for. That way, when you identify that really awesome trading opportunity, that killer trading opportunity that fits your rules and fits your qualifications, that you can engage the market. And guys, like I said, you only got to be right, one time a day. You know, just pick your spot, pick your poison. And then because of the risk reward pile, because we're risking one to make two, that means we don't have to be right all that often. We could be right, 50% of the time, still basically break even on this deal, do a little bit better than that even. So as we watch this market now, I'm probably going to have to pause the videotape because we've been running about 5 minutes now, and you're probably tired of listening to me chat on about this. But I will come back as the market presses back down. But what I was going to show you is that another indication that this market is going lower is we had this support level that I just drew in. And I'm going to fatten it up so you can see it there at home. But you can see market breaking below that level several times. If we look left over here, again, what I did was I took the wick, this is a range bar, so it doesn't really matter. But no matter where you draw this thing in at, there was the support level. And if we look back this direction, you're going to see that support level was defeated. And we did get moves below that area. And so what I want to do is I'm expecting this market to continue lower. I'm expecting some continued downward pressure. And everybody's thinking, oh my goodness, how can it go any lower? Look at how low it's already gone. But guys, it's never too low and it's never too high. The market we don't make those kind of qualifications on the market. What I do know is this market is overly bearish, and I want to be bearish when the market is bearish. Let's go ahead and draw in a Fibonacci retracement. And oh, look at what we've got right there. Right at that level that we ended up selling is a 382 retracement. Right there is that 382. Let me fatten it up. So you see I took the last impulse leg. And we're going to talk about impulse legs during the 2-week training that I'm running on the 19th. And if you haven't had a chance to sign up for that, of course you can do that right underneath this video. But if I draw this in here, you're going to see, and I'm going to do it a little bit better so you guys we get a good nice little deal on here, but you can see that not only is this downward leg with this retracement is coming into these Fibonacci 1618 extensions, but it's also coming into that 382 retracement, which is very nice because that's additional confirmation if the market rolls over here that we're going to go lower. And I'm going to show you guys just how low we could potentially go. Let's go ahead and draw this in. I'm going to get my Fibonacci extension tool out. I'm going to take the high of that low to the lowest low that was put in before the retracement, and then I'm going to come back up. We could go as low as this 1618, 139.22s. I'm not going to try and get that much out of it, but let's just see. Let me just draw a couple of lines in here. I'm going to hit one here. Whoops. I'm going to, hang on. There we go. Get the right tool. The right tool for the right job there. Put these lines in here. Okay. Then I'm going to bump out. I'm going to scroll over and see. I probably can't get enough data here. Nope, I can't. But let me go ahead and bump this up to a 60-minute chart. And it'll take just a minute for that data to populate. But once it does, oh, look at that on the 60-minute. Look at how that market spiked and then rolled all the way back over again. Let's get on this 60-minute and let's see if there are any support levels back here along those lines. There's one right there. You can see that one. You can see that the market did come in there. So that first level at the 127 extension is going to be a nice level, and that's where I'm going to look to take off the balance of my profits. So let me see here. Let me go back out. I've got to get on the range bar. Let me pull this back up again, and we'll go back out to the range bar. And again, wonderful, wonderful tool here with eSig or with NinjaTrader. I said eSignal with NinjaTrader. eSignal is a wonderful tool too, but this is an exceptional tool for those of you who are trying to find a good, solid charting platform that's going to give you the ability to use the Fibonacci's, because that's the toughest part, guys. Is these Fibonacci's are, it's tough to find a good platform that's free that's going to give you these Fibonacci's, and so that's why we use this one. Just trying to find fatten these bars up a little bit so you can see them. And right now you can see, guys, look at how the market is just repelling right off this 1618. It doesn't want to go any higher. The market is holding this level. 1618, 1618, 127 extension. The market is tested. It's pressing, but it can't go any higher. It can't get above that level. And so what I want to see now is this market to roll over, to put in a new structure low to the downside, and then of course we'll be looking to take off of our profits at around 140.46. So again, 10 minutes already on this video. I'm going to pause it. I'm going to come back once we have something else to talk about. And until then, well, it'll be a couple of seconds for you, but for me it could be an hour. We'll see. Be back. Okay, everybody, short and sweet, just like last time, market's now moved in my direction, up about 30 pips or so. I don't want the market to move against me now. If the market puts in new structure highs here, obviously, I've probably on the wrong side of this trade, and so at least I don't know where it's going to go. So what I'm going to do is I'm going to move this down to about 140.04, just above those spike highs. So I will take a few pips of a loss on this if it ends up coming back, but by far and away this is going to protect me. Now, if I get a cycle top in here, and what I mean by cycle top is if this market retraces up and then comes back down. If we do one of these numbers where we came down and then we pop up and then we cycle over, that gives me a cycle top, a new top. I can roll my stops down and protect my profits. But until that happens, I just have to leave those open. And this is a hiccup for some traders. They don't really like doing that. But it's essential not to have your stops too tight. Otherwise, you get stopped out of a position that could have made you a whole lot of money, and instead it only makes you a really little bit of money because you had your stops too close, because you were getting a little scared. That fear and greed kind of kicks in. And so, again, just watching this, I'm going to pause the tape again. The tape. I'm going to pause. It's like it's 1985. I'm going to pause the video, and when I come back here, we'll see if we can hit some targets. And alright guys, I actually was working on something else. We're trying to figure out how to do a bunch of green screen. I like to do lots of really cool videos. I'm sitting on a bouncy ball, sorry. I like to do really cool videos to help keep people entertained, and I was working on over, actually you can see it if I turn the little camera over. You guys can see right there on my Mac computer, I was working on some green screen stuff, and I got a little deal, and it said order filled. What do you know? Made a little bit of money. And like I said, about 40 pips or so on that. My stops are now going to go to break even, and I'm going to go just a couple of pips under, just like I did last time, to ensure that if the market rallies here, that I do get taken out for break even. But I've made 40 pips so far. Now I do want to change my stop here, modify my stop order, because half of my position has been filled. And now I'm going to take the balance of my position down here at the 127 extension. I'm going to front run that order just a hair. And I'm going to buy limit, buy the other half back up down here. Boom. So now I will wait again a little bit longer. The market's going to come back down into this support level, and I can actually delete all this stuff. But before I do that, let me just cover this one more time with you. Again, look at how well this worked. The market got sucked up into this 1618, 1618, 127. We got all of this ratio confluence in here, right at a 382 retracement that we identified before. And once the market sucks it in there, it pushes it away. It's like, you remember the old video games? I don't know, some of you guys are too old to remember this stuff, but it's like, get over here. And then once it gets, it's like, oh, no, you didn't. And it pushes it back away. And that's the way this kind of works, and so it sucks price action towards it and then repels it away. And this is another great example of that on this particular trade, coming right up into that zone and then pushing it away. And as you can see, guys, this is why we front run those orders, because it's not perfect. It is not an exact science, and we want to make sure that we get filled on these orders when the market comes in there, because right here we were short by about a pip or two, getting filled on that. And because we front run our orders, or because we front ran our orders, we ended up getting short on this, even though the market didn't come in and touch that 140.91 area. So, great little trade there. Now the expectation here is that we will retest these lows, where this support level came in at, and we'll see what happens after that. Anything else I want to say here? I don't think so. This video's been running about 15 minutes. I hope this is valuable for you as far as you're growing in your knowledge, and more importantly, of giving you information prior to the 2-week boot camp. Because guys, this is exactly what we're going to be covering. I have another mechanical model, and I'll show you that mechanical model right here. This is the mechanical model that you're going to be seeing during the Pro Trader 2.0 boot camp. And in this situation, I'll just give you a real down and dirty on this. We would have gotten short this market right, let me see here. Yeah, right here. We would have gotten short right there. Boom. Sold them, and the market rolls over. So a very, very nice shorting opportunity there as well. Just shows you that whether you trade a mechanical strategy or whether you trade a ratio strategy like the one I'm teaching you here, you could be successful. And again, I'm not covering this particular model in these training sessions, basically because, I mean, it's idiot proof. It's trader proof, because if all you got to do is just follow the rules. It says, if sell here, buy here. There's no advanced analysis that is involved with trading a mechanical strategy. It's simply a buy and sell. Learn the rules, follow the rules. It's like I said, it's trader proof. But what we're going to be covering is a lot of training, not only on this particular strategy in the program, in the 2-week program, but we're also going to be covering some stuff on higher time frame charts as well, so that you guys can see the different time frames and the effect that has. But anyway, I'm going to hold out with this. The next video will be the next little section here will be the last one, and it'll be, did we hit our target or did we get stopped out on trails? Actually, if we put in a trail stop, I might do another video. But sit tight, and I'll be back. And alright, group, we just about made it. Almost hit that second target. Haven't hit it yet, but clearly breaking the structure here. Now what we did do is put in a nice cycle top here. So I can go ahead and roll my stops down to just above that cycle top. And what that gives me, guys, is it gives me a great place. See how nicely that works out when I just go ahead and I wait and I don't get too greedy or I don't get too aggressive with that stop placement, is now I have a clear spot where the market has found some resistance. Boom. Whoops. Then we rallied back up, and then we rolled over again. And actually, this should put in an ABCD, and that would have come in pretty much right where, almost right on the money where I wanted to get out of this market. Now, again, I just wanted to go ahead real quick, show you how to roll the stop. I'll come back if we get stopped or if we hit our target. So it shouldn't be too long now. One of those two is going to happen. But up almost 100 pips already, guys. We've taken 40 out of the market. Let's just call it 40. And again, I'll bring in my calculadora for those of you who are math challenged like me. We hit 40 at $5 a pip. That's a couple of $100 there. And now we've secured a little bit more in the balance, but now we'll see once we get done. But 200 in the bank, we've locked in almost another 100 or so. But let's just wait and see what happens if we can come down and hit this target or not, and then we'll take a look at how much money this trade actually produced in a very short period of time. So hang on. And man, I barely paused the tape. I keep saying the tape. Barely paused the recording, and that secondary target was hit. So we made $200 on the first half of the position. Now we had another half of the position, which ended up yielding us about, we'll just call it 95 pips or so. So 95 times $5 a pip, again, $475. Add that to the 200 that we made on the first half of the contract, or the first half of the position, a total of $675. And this trade went on, let's see when we got short. We got short at basically 10 after 9. And it is now, it's about an hour, about 12 after 11, an hour. And, I don't know how much you're making now, but $700 an hour ain't all that bad. So again, another great show of just a showcase of, guys, look at how well the market held that line. Market was sucked right up into that Fibonacci ratio confluence level that we talked about at the beginning of the video. And then as soon as it got in there, market throws it back. And it repels it like a magnet. It sucks it in like a magnet and then repels it like a polar magnet. God, that's a terrible analogy. But you guys get what I'm saying. This works again and again and again and again and again. As you can see, this thing just keeps falling. Keeps falling. So we'll go ahead and see. Again, I'll keep playing this out and trading it as it comes. But I just wanted to show you guys another great example of how you can use this stuff every single day to make money. And this is what we're going to be covering in the 2-week boot camp. So again, if you have not been there, go ahead and sign up. It's going to be tons of fun and lots of free giveaways. You'll also have a chance to win a free computer from tradingcomputers.com, $3,000 machine, and an iPad. So if either one of those are of interest to you, you're going to want to sign up just for the goodies. But until next time, guys, good luck and good trading. I'll talk to you soon.